Hey everybody, happy Friday. Markets deep in the red today and futures selling off. We'll see what zero DT looks like today. Non-farm numbers were absolutely atrocious. We had a negative 92,000 print from like a forecasted 60K. So not good. Let me bring up the chat on YouTube and let's say good morning to everybody. Okay, so we are live, or we're not live. Blake, are we live this morning on YouTube? Let me know. All right. Bruce in the house, Tony here, Greg here, Corey, Dave, Michael, Aurora, Doris, what's happened? Pete, good morning. Where's my man Don? I got to give Don a huge shout out. Oil is cranking, and he might be onto something. Maybe Don has some inside knowledge. No, it just has not stopped. We had one little pause in oil, and from 71 to 87, we are now in like the 50+% rip off these lows. Oil is up 57.9% and still going. Yeah, we could be up to 90s. We could crack 100. Who knows? I'm still not going to chase it. That pullback I wanted is looking like it's not going to happen. I don't know. This is just a chase, and I'm not a chaser. So, what I do have running is I have XLE running, doing just fine. I have XOM running, doing just fine. I have XOP running, doing just fine. I have CVX running, doing just fine. Right? Like I've got some exposure in the energy space. It'd be nice just to be long oil futures and crushing it right now, but that's not the case. But that is okay. All right, Catherine, what's up? Here's Don. Oh, there it is. Don said oil P 100 by next week. Yeah, look, man. I'll give you the 30 days. I mean, it could be next week. Who knows? But we'll see. I mean, here's the deal, though. It's like, okay, let's say that oil does get to $100. Do you think the U.S. wants that? Do you think that everybody watching their pump prices? I mean, I've seen it out here in Utah. We had 269 just a week or two ago. Now it's 289 to 299. If we see gas right back up into like 320, 350 a gallon, creeping up to $4 a gallon, I mean, we're going the complete wrong direction. I mean, you talked about this. We've heard about this reflation trade, right? Well, that's that's going to feel. I mean, direct inflation feel for the U.S. is going to be gas at the pump and grocery store prices. So, and I think that we have intentionally been suppressing inflation data, and I don't think there's anywhere to hide if if oil rips like this. Um, I don't know. Anyway, I'm not going to speculate. I'm not going to chase. This might be a trade that I never touch. I can't look at this technically and think like this is a good spot to buy. It's not. I mean, this is playing with fire, and you could be rewarded and you could be crushed on it at the same time. I don't know. Like I said, you look at a chart like this. If I have an opportunity to buy in here, I feel a lot better about the move. I am not chasing this move. I'm not chasing this move. I'm not chasing this move. Even if we came all the way back up here, I would probably take it to fine or short. Even if we get to $100, I might take it to fine or short. Otherwise, I just stay the heck out of it. And I watch with, 3D glasses and popcorn, and I kind of enjoy the dumpster fire that's happening right now. But I don't need to chase this and try to monetize it because I know that I have exposure. If oil goes up, XLE, XOM, CVX, individual energy stocks, Halliburton, it's like all these could be benefiting from it, you know? And there's ways to monetize it. So, point is, if I'm late to the game, I rarely chase without having the charts at least obey and give me something I want to find, which is just give me a pullback. And if we don't have it, then I'm not touching it. Okay. Yeah. So I'm not showing on YouTube. I'll see if Blake. I don't know if we can push it now. Maybe we can. Maybe we can't. Get some more comments here. Yeah, I agree. Like we don't. Trump doesn't want oil at $100. Everything that we're saying that inflation is lower. Well, not right now. It's not. I mean, this is about to be like, when does this start to take effect into, our inflation readings? Like it's hard to think about like our CPI, PPI data that comes out every month is actually truly reflecting what's going on in the real economy. I mean, this is why, I mean, I use this. It's like trueflation to me is a much better reading to what's actually happening in real time. And I mean, this is still surprisingly low considering what's going on with the oil prices, but there's also a lot of other metrics this thing pulls in. There's a ton of data points to trueflation. But going from 2.7 down to 0.65 or 0.67, now we're back up to 1%. But I mean, today's job numbers are awful. VIX at 28.17, by the way. So we are seeing some higher VIX. I don't think that gamma levels are necessarily safe. We'll take a look and see what's lining up pre-market. Futures is way down. We're down 1.4% futures. So I will say this. I mean, nobody knows what's going to happen today, right? I would like to sell some premium like we did the last couple of days. That's probably going to be on the bear call side. I don't know if the market, gaps lower and rips the entire day. I think we have to call levels. So if we're opening, right now, futures is down 1.4%. So let's take that from the close yesterday. Go 1.4%. We're going to open on the SPX is opening around 67.40, 67.35, maybe lower, depends on where futures are here in the next 20 minutes. But that's way down here. Now, the deltas are going to be extremely small to sell a delta at like a 68.30 or 68.40, 68.45. But if I went 10 wide, 15 wide, and take a stab at just a couple of bear call spreads, if I can pull another, safe dollar or $1.50, I might take that as my trades today. When the market is down this much, I think we could push as much as 2 to 3% for the day. Those have been some of our nastier sell-offs here the last couple of months. It takes 7% to halt the market. I mean, nobody's going to want to see that. But if it happens, I'd rather not be calling the bottom, right? So if we can sell some bear call spreads, that gives the market a chance to, gap lower, either continue to flush and maybe we can grab some quick premium, or it gaps lower, tries to fight back all morning. And I just wanted to see it. Hopefully it'll stay out of the way. And then as far as a bottom, we're going to have some good premium today to sell with the VIX at, 28, 29. It might crack 30 and go up, and we have like this, maybe 20 to 40 is going to become the new kind of range. But for right now, we're pretty clearly seeing that volatility is here to stay. And that means a lot of things. Volatility to me means selling out of the money premiums, collecting income, project options edge style. Volatility to me means that hopefully this decline will get us filled on some of our stacked waterfall income trades. Volatility to me means the defense trades we put in for engineered options. I mean, these are all good things. These are just stabs at decent levels. Okay. But for a 0 DTE, I mean, this is happening in front of our eyes today, and market makers are clearly not ready for, futures to be down 1+% intraday. I mean, let's see what our plus or minus is on the day. Plus minus on the day, I was looking at a futures trade. It's actually not. It's not a terrible trade, but it's also a bigger risk than I want. I was looking out to, I think, May 29th. I was going to the futures low in April. If I did a broke wing butterfly, I could pull in. If I got $2, it gives me $100 income with the profit trap opportunity back at the April lows. But I don't. I mean, in futures, like I can't repair this. I can't repair a $4,900 risk if I'm wrong. I mean, this is $100, like $100-point trap, but yeah, I'm probably not going to take that trade. So anyway, let me see what SPX is pre-market. I mean, we're IV rank is 35.3. That is higher. We jumped up to like 27, 29, now 35. I want to think what was it during Liberation Day? I feel like we were IV rank like 60s or 70s during Liberation Day last year. So today's pre-market 68.11. 68.11. Okay. So 68.11, we're having just chaos underneath the surface already. Futures market down 1.3, 1.4%. 2 to 3% is a pretty extreme move as far as like, market makers, even though they might lose their grip of it for the day, things are still relatively contained as far as like intraday. A 2 to 3% sell-off is painful, but that's about the extreme when the market's just been bleeding lower all day. But who knows? I'm just saying, like, I don't really want to call a bottom. I know that if we're breaking the 6,700 lows today, I wouldn't mind putting in like a crazy butterfly spread, but let's price something in here. If we went from what's 3%? If we have a 3% sell off today, we're around 66.25. 66.25. Now, could that happen today? Sure. Maybe to be even safer, I might do like a 6,600. I might do a 6,550. Like I might throw a wide, crazy, 15 to $20 wide broken wing butterfly put spread and see if I can capture some of that with like a 3+% sell off. And it's like, it'd still be defined risk. I'd try to go like risk four, make one, but have like a 10, 15, $20 profit trap. If volatility is high enough, we might still get lucky on a trade like that. Could I still lose on a trade like that? Yes. So my plan is, and we actually repeated this Wednesday and Thursday. I'm going to do the same thing today. Is if we open here, can we break these lows? Sure, we could break these lows and continue to go lower, or we could break these lows and see it fight its way back, like it has every time we've hit fresh lows. It bounces hard. So I don't want to be crazy heroic today. I just want to be trying to grab a couple of bucks on daily profit play. And if we get filled on other trades, defense and engineered options, stack trades on waterfall income, selling some premium on project options edge, great. That's all I want. Okay. Am I leaving them on? Yep. I'm leaving them on. We're only in one trade this week for engineered options. We're in one break even trade. That was it. I have no defense filled. So if we get filled on defense and the market can rally on Monday, we can still carve out a winner. Ernesto, you got 74 on Thinkorswim. Okay. Let me verify that here. I believe you. I'm just going to see it with my own eyes. Because I would definitely take the higher of the two. So SPX, pre-market, option chain, 72.22. Okay. So that's fair. 68.11 tasty and 72.22 expected move on Thinkorswim. That's fine. So we'll use those numbers when it comes to our prep. Futures on 1.32. So we'll take our open price, plus or minus 72 should be about where the markets can stay efficient for the day. We'd have to have a miraculous comeback for this thing to be like ripping all the way back up here. So again, because we have a higher VIX, if I can sell premium above the 68.45 or at it, and it's going to be maybe low, like out of the gate, it might be very low premium. But if the market gaps here and tries to fight its way back, I'll just let it sit with a pending order. Okay. So if I can go 10 wide and pull $1, I might just take that trade and let it be that for the day. But if it's like, okay, I'm going 10 wide at 60 cents, I'm going 10 wide at 70 cents, 50 cents. I don't think I want to get filled for 50 cents. So again, it'll be a pretty similar playbook to what I did the last couple of days, which is I've been leaning more bearish. And until we are down here to see if the bulls are going to step in to buy that aggressive like dip again, we gap lower and we rip. If we break these lows and we bounce off those levels, okay, fine. But I think the safety net today is gap fill is going to be challenging. Positive, negative, again, pivot at 68.45. As long as I'm selling calls above this, it should be pretty safe. I still want to put in some defense if needed, but let's see where the market sets up. So 1.3% is going to be opening up roughly around like 67.40. And with the VIX and everything, I mean, we could go like 100 points higher and maybe get some premium. It might not be great. We might want to put a couple of pending orders in, but I just like to kind of safely trade in this like 68.40, 45. I guess the question is like, would some news happen today that's like, okay, non-farm numbers were absolutely terrible? Is something going to happen today news-wise where Trump's like, hey, we're going to immediately de-escalate the stuff in Iran, and the market just absolutely rips to the upside? That could happen, right? It's like we have to be so prepared for anything, but it's like you can't not trade. If you want to do something daily, it's like there's opportunities. To me, the opportunity is either one, I go so far out of the money on the put side that we have a high percentage of profit, like we go to like a very, very low delta and craft some type of butterfly spread. So there's a bigger profit trap, or just sell. 6,500 would be so far out of the way. The market would have to be down, almost 4.5%. So I'm just curious, like, what does it look like today? That's a big sell-off. It could happen. I mean, does anybody think the market can't go 3, 4, 5% to the downside on just one atrocious day? Yeah, I mean, it can happen. All right. Adjuster defense trades higher than the 50 cents for what? Engineered options or waterfall? 682.61 filled yesterday. Okay, I got filled on that one. It would have been filled on Tuesday for me. That filled on Tuesday when I took the trade. Oh, engineered options. Yeah, but the defense trades aren't even filled yet. I mean, the defense trades. Let's go engineered options workspace here. So this is my defense. Let me go to the weekly. Okay, so if we come back down to the 50% or the 100%, we'll give it a chance. I mean, at least with the 100%, if we get filled at the 50 or the 100 and the market wants to use this low and try to rally off of it either today or Monday, we got a fighting chance for defense to win again. I mean, if you want to change your plan, change your plan. This is why I trade small. This is why I stack in my trades the way that I do. It's like I don't need to set these trades and then have a completely changed routine. It's like if it works, which it's been working, I'm going to keep trading it. If all of a sudden I change all my levels, it's like, okay, what do I do then? I change my weekly lower. I try to have my 50% fill for 60 cents, 65 cents, 70. It's sure I take less risk, but it's the same trade. I can still lose. I'm just going to keep the same trade. It's okay. Like I said from the very beginning, it's like my job is not to micromanage engineered options. My job is to let the markets do what the markets do best, which is if all we're doing here is, and I talked about this box trade earlier this week. If we have a box and 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 we have a box, if that's all the market's doing is boxing in, but still going to bounce, right? If we end up going to fresh lows and bouncing back up, we could still hit defense trades and still win defense trades and still make money for the week. I wouldn't be shocked to see that happen. Now, could it go down lower and have a nastier sell off? Sure. And guess what? I would lose the stack of trades I took for engineered options, but I'd get right back in and do it again because I think there's still strong support at 6,500 and there's strong support at 6,150. And week in, week out, the market fights and the market battles, and there's supply and demand and efficiencies. So I'm just going to keep trading, man. That's all. So, I mean, if we have a chance to get filled today, it's like, okay, this is the 640. I guess I'll go XSP here. So if my, 60, 675 or 674 gets filled, cool. I'm getting a 1-to-1 as long as price can stay above that. If my 100% gets filled, 667. If that gets filled and bounces, I mean, if we can get a break even here, a winner here, we still make money. If we can carve out a defense winner, and winner, like let's say this wins and this wins, our defense trades, we'd have 2 winners and 1 loss. We'd still make money. Again, it's the box trade. If this is what's truly happening, is the market is just starting to slide a little bit lower box wise, but it's the same type of measure moves, there could be a decent bounce there. If it gets worse, okay, I accept that. But I'm not going to just throw my plan out the window and just make a one-off exception. It's like I trust the defense are there for a reason. The ATRs are there for a reason. This stuff works, And it's surprising that we've seen so many weeks so far where the market isn't break even or better. And I just think give the market a chance to fight. Okay. All right. I mean, you're right. They could, and if they do that, David, and if they gap lower, we will get filled at a higher credit. If today it opens up and the first available price is 60, 65 cents, we'll get filled at that. So they'll fill us at the first available spot. If we're asking for 50 cents and it opens up with first bid and ask at like 60, we could get filled at a better price, which is fine. Okay. All right. So we're opening up here in about 7 minutes. Futures at 1.33. My goal today, let me get some real-time gamma with dynamic trends. Look at pre-market. Flows are going to be all over the place. It's going to be a lot of red. So here's March 6th. I mean, it is all negative gamma today. So It's a long ways to get to 68.45. We're gapping lower. This is real price right now, 67.37. We're opening way down to some fresh lows. 67.11 would be the fresh lows. Okay. So could we have a bounce at 67 and rally? Sure, maybe. Could we have the pressure of this market pushes 2.5, 3% for the day? Maybe. So here's what I'm going to look at is I'm probably going to look at doing some type of like 6,500, broken wing put fly, take a chance on that, maybe 65.50, and look at selling 68 kind of 45. It'd be 68.45 or higher bear call spreads. Okay. I'm not trying to get into the trenches of like what this crazy volatility in day could bring us. It's like if we gap lower and do nothing for the day, that'd be a huge surprise. So I'm basically thinking like the market makers probably want this to be like such a big expected move, but at 72, that's not that big considering the VIX is at 29 or 30. Okay, where's the VIX right now? VIX is at 27. Okay, let's see if we break 28.28 this morning. So there's a high in the VIX. Let's set a chart alarm around 30 on the VIX. If this thing keeps going, it's going to be tough to catch the bottom. But right now, just alone, 27.68 VIX. 27.68 VIX. We could have a 1.7% swing. Okay, 1.7%. We're already at 1.3. Could we stack another 1.7 on top of that? Yeah, we've seen that. There's that 3% day that I'm talking about. If the VIX is right up here and the VIX retreats aggressively, then the market might just try to spend time, closing that gap. Or we're down 1.3, we just spend time closing that gap. Okay. So I don't know. I mean, it's already been a good week, honestly. We've had plenty of winners this week. I'm curious how engineered options, if we get filled on defense or waterfall income, we get filled on a sell-off. I'm going to try to sell some premium today at these highs, probably for Project Options Edge, another like stack premium below the 2025 lows, and see what that looks like. And then from the zero DTE's perspective, like I said, I'd like to sell something around 68.45. But if we open here and we go up to fill this gap, there's a 1.3, there's a 1.5. I mean, my VIX at 1.7. It's like, I hate to say it, but I almost need to sell like a 68.50, 68.60. And it seems like that's so cautious. But I don't know why we take any excessive risk or chances on a zero DT when the market is just all over the place. So if I set these levels, like I said, if I can get some credit up here and I put in like, all right, I'm pretty firm on like a 68.50, 68.45 sell on the call side. As long as I can get like $1 for a 10 wide, I'll take the trade. But if it's not offering at least $1, I don't really want that trade. It's like, I don't think that's enough premium to pull in for the day. And then on the put side, I'm just going to go 3%. So this 3% puts us around like 6,600. It's like, to be safe in the put side, we're going to have a lot of skew in the markets anyway. I mean, your put skew is ridiculous right now. Could we go to like 6,600? Could we go to 65.50? It's like either looking out to today for these levels or even on Monday. I don't love the weekend gap stuff just because who knows what the weekend might bring. If we have something escalate over the weekend, oil prices surge to $90 to $95, we could have the market dump and be looking at like a 2, 3, 4% gap lower. So I'd say a hold off on like Monday, right? Anyway, that's a lot of talking. We're going to, see it come to fruition here in about a couple minutes. I'm going to try to look at some bear call spreads just above the positive negative gamma pivot, stay out of the way. Put side, I'm going way the heck out here, probably like 65.50 or 6,500, and go so far out of the way, the market would have to just absolutely dump, 4 to 4.5% for me to be in any trouble. Could it happen? Sure. Is it probable? No. So I'll take a defined risk type trade in here where maybe it can hold at like the 6,500 handle. If I can build a broke wing butterfly for that trade, I try. Okay. Let's see here. Why hasn't engineered monthly trade? Just because of time. Just because of time. I mean, it might feel if we're down to like 675, it might fill. It might fill. Okay. Based on the VIX, 1.75. Yeah, that's what I'm saying. Like to be safe, when we open up here, it's like we probably have to respect. I mean, again, we're in negative gamma. Okay. So the probability of the market opening lower and ripping all the way up here is pretty slim. So it could happen and we could have risk to the upside, sure. But I would be want to stacking like, 68 50, 68 75, 68 I guess 6900. If I stack up some bear call spreads, that should keep me pretty well contained into like whatever the market could do to the upside. Okay. Look, if this seems like chaotic planning this morning, it's like, then don't trade. One thing we could do is enjoy the fact that we've won every day this week in daily profit play, and don't force a trade when the market's going to gap 1.2% lower and be a complete wild card today. I have no clue what the market's going to do today. Okay. The only thing I can say is that we are in negative gamma. We are clearly, maybe pressing these lows. And so if the market's opening up here to try to get to those lows, that's the box trade that I've been talking about. So if you want to sit this one out and just enjoy and just be a spectator, be a spectator. There's no reason to force a trade if you don't know what to do. Okay. I am comfortable taking some defined risk. That's pretty much it. So I'm going to check something really quickly. SPX for today. 65s. These offer like little to no credit. Let me go. Let's see, like how nasty could it get today? It could get pretty bad out there. Let's see, like a 65, 50, 25. So that'd be 25 wide. And then let's go 30. So that's a broken wing structure. So right here, if this offers any credit, I'd take the trade, but I'm going to put this in for $1. That way I'm risking. So I'm risking, that's 25 wide by 30 wide, right? 25 by 30. Why is this not showing? There we go. So I should be risking 4 to make 1 and then have a profit trap there. Let me see if this offers any credit today, but I'm gonna put this trade in. So this is 65.50, 65.25, 64.95. That's a 25 wide profit trap with a 30 wide credit spread. If this offers 50 cents credit, 25 cents credit, I'm still going to take it because it's such a big profit trap opportunity. Market would have to be down 4.5% today, which is super, super hard to do. Could happen though. So I'm going to throw it out there as like a wishful trade. And then on the call side, as long as I'm above like 68.45 or so, I'm going to look at selling some bear call spreads. Okay. Let's go. Okay, pending order. That's a broken wing structure. Now let's flip this to the call side. 68.45 is about a 10 delta. Okay, so we should get some premium for it. 45, 55, 55 and 60. It's $1 and change. That's above positive negative gamma today. Gap fill around 30. All right, if I'm trying to grab a couple of bucks today, let's see if we can go $1.30. Oops. So to me, the risk is not really worth it. I want to stay above the gap. Let's go dollar. Let's go $1.45. Okay, $1.40. I'll take this on for kind of my day's win. Come on, $1.40. All right, $1.40, 2 bear call spreads. I'm going to play some defense that we talked about yesterday. So here's what's going on. So new trades. I'm doing bear call spread 68, 45, and 55. That's 10 wide. And then I sprinkled in a 50 and 60. So a bear call spread combo today. 3-6. Expiration. Sell the 6845 call. 6855 call. 6850 call. And 6860 call. $1.40 credit. Filled. Okay, the day is not done. I'm not getting in the way of the put side right now, just in case the market's going to dump further. We have lows at 67.11. So if the market is going to gun for those lows, here's real-time gamma. Okay, if the market's going to gun for 6,700, we should see some profit quickly on our bear call spreads, I would be fine taking that profit early this morning. If we hit 67, and bounce, we could put in a low for the day for a very low risk bull call spread. Okay. But probability of us getting all the way back to 68.45 today should be pretty darn difficult unless the narrative of the day switches. Okay. Anything is possible. But if the market is leaning towards, hey, this low has already been created, this market's going to lean to pressing on that low today, our bear call spread, which is up here, should just see additional profit if price is going to fall a little bit. So I have a chart alarm set at that 67.11 low. If we go for this 6,700 gamma, again, notice here there's nothing below 6,700. Even though the market is down for the day, I don't see it necessarily going too much lower than 6,700 before we bounce back up. Okay. So let's keep an eye on this morning to see if we can grab some quick profit out of those bear calls if we push towards 67.11 or 6,700. I don't want to call the bottom today. Okay. I'm just going to go bear call spreads. So bear call combo. And right now that $1.40 is already up 40 to 50 bucks. I'm going to set a take profit. Let's see if we can get a take profit here at like 35 cents, 30 cents even, grabbing over 100 bucks out of it if possible. And just take a quick win if we can. Stephanie, getting close for our 67.40 and 35 fill. Is that you talking 674, 673? Or is it a monthly fill? Okay, so keep an eye on this. I'm looking for a chart alarm at 67.11 to 6,700. If we hit those levels, let's see where our bear call spreads are at. Could price fall lower? Sure. I'm just going to keep a couple of markers here. So market's down about 1.6. If we break the lows, that's 1.7. If we push to 2+%, okay, 2% is around 66.90. Okay, 66.90. If we push to 3%, 66.25. I'm just going to write these down. 66.90 or 66.25. That's a 2% sell-off of the day, and then 3% sell-off of the day, 66.25. Okay, one thing that would be pretty interesting. We have the market gapping lower. Okay, so if we gap lower, let's take the 72 pre-market that we saw in Thinkorswim. So the market opened here and pushed a little bit lower. Let's take that. I still want to see ultimately if the market is inefficient based on just expected move. So we open here. We have a plus minus 72. Okay, so there is the 72 to the downside. And then we have the gap plus the 72. That is the most conservative way to trade with the expected move. Okay, so prices should stay inside of that blue zone for the day. And then you sprinkle in, okay, well, is it going to be possible to come back and fill this gap today? Maybe, but possibly not, right? Gap gets filled later. I don't know. The market would have to dump, I don't know. I'm curious what happens. Just keep an eye out for 6,700 or 6,690. Okay, I say that because look left on the chart. We have 67.11 right here. If we just come in and poke these lows and the market rips off of that, it could spend the rest of the day bouncing and then going back up. And I don't know. I don't know if that's going to happen, but we're about to find out. So I'm going to take a chance and see if we first tap this level or tap 6,700. That's a gamma level. That gamma at 6,700, this gamma, to me, this is real-time gamma dynamic trend. 6,700 seems very gettable. So if we get there today, I want to see what my profit is at for daily profit play. Right now, there's a quick 50 bucks. If this can get if this presses to like, let's say $90 to $100, I'm just going to take the profit and not worry about the rest of the day. Okay. I mean, see, look, I do it the way that I can do it. It's like what did I do before I placed the trade? I said I'm going 45 and 55, 50 and 60. Like this is why it's zero DT, man. This stuff it's fast paced and it's fast moving. I don't want it to be like this. But put the trade in if you want it. Take the same trade I do. Look, here's what's going to happen. If this market hits 6,700 and bounces, you can still get this exact trade get filled. This same trade right here can get filled if you put it in pending. I mean, I can't slow down other than repeating myself 3 times before I take the trade and type it in Telegram. It's a quick trade. It's zero DTE. This shit is fast. I got filled within, 5 minutes of the open. We talked about it. What did I say for 30 minutes? I said I'm going to look at selling calls around the 45 or 50 handle. Did I not? That's exactly what I did. So I was ready for those trades, ready for those strikes. I'm not happy at $1.40. I wanted like $2 for that trade. I'm settling for $1.40, and I will still kind of monitor and navigate for the rest of the day. It's like I don't like $1.40. I'm taking on like $1,800 of risk for that $1.40. But as far as where I place them, it's like, okay. I mean, the market makers right now probably have the highest expected range, and volatility is still quite high at the 28 plus. Could we have the VIX go higher? Maybe. VIX goes up to 30 plus. We're probably going to keep pushing lower. So, like I said, I'm trying. It's like I'm trying to communicate this stuff for the 30 minutes that we prep. It's like I did the exact same trade that I talked about before we started opening bell. And I settled for $1.40. I don't love $1.40. I think that's a mediocre trade. That's a mediocre trade. The smarter trade, honestly, is I like the level. Okay. The smarter trade is to now sit with the pending order like 68.45, 68.55 for like a $2 fill or a 250 fill or $3 fill. Because that way price bounces, you get a much better credit to make more money today. And if we miss a trade in zero DT, there's always tomorrow. There's plenty and plenty and plenty of chances here to trade. Okay. But that's why we prep. I mean, I literally talked about the trade 30 minutes before we started trading it. So I did exactly what I said. I didn't know what the credit was going to be. Why am I pulling in $1.40? Well, because it's enough to grab a couple of bucks today. I grab let's say a dollar out of that $1.40. I'm pretty happy with that, and that's fine. It's adequate for the day. But my day isn't done. I'll see if the market bounces off 67. If it does, maybe there's a chance to get a bull put spread in there or put one that's out of the way. I just don't want to step in front of a steamroller picking up a nickel for $1,000 risk when it's like, well, does this thing break 67.11? Does it break 6,700 and continue to flush into open space? It's probably harder for the market to dump all day, and it's probably harder for the market to rip all day. If anything, it's like the shock factor of, oh crap, terrible job number, and oil spiking to $80+. But it's like, if I'm going to give the market an edge, it'd be like it'd probably be easier right now for the market to just keep falling to 6,700, and then we see what's happening from there. If it breaks 67, it's going to be a really ugly day. If it bounces off 67, the market makers are trying to defend, right? And it could be as simple as this. Look at this blue line. That is the measure move on the expected move today. If this market bounces around 66.80, you know that the market makers are here. The market makers are there doing this math and defending this level. Okay. All right. So we'll see. But like I'm saying, like, don't feel bad. Don't feel bad. Don't be mad. There's another day to trade if you missed it. We prep and plan in the morning, so we have a game plan. And I executed the trade, which is what I talked about. But I am settling for $1.40. I don't love that credit at all. I hate that credit. But I'm taking it because I think it's a pretty safe way to make $1.40 today, or make a portion of that. But the day is just getting started. Is the DPP less hectic? I mean, standard wise, yes. Like daily profit play should be less hectic, but I'm not doing the standard daily profit play because if I have to go down here and the market's going to press lower, I don't want to see the market, push my put side. If I want to go here's a simple trade. Okay. Now the market's already slipped a little bit lower. Let me look at my levels here. So this is what we calculated. If I did like a 60, let's go 68.40. I'm just going to try to put this in for a 5 delta. I want to see what it prices out to be. So if I went 10 delta right now, I'm going to go call side 35 by 40. Put side 10 deltas at 60. I mean, this is so far down there, man. If I went, let's see, 6,600, like that's a really, really awful push for the day. What would that be for the day? If we were down to 66 and change, like that's over a 3% slide today. All right, I'm going to put this trade in as a standard daily profit play. Let's go 6,600, 65.95. Let's see here. I could just stack this one up again, 45.55. That's 90 cents. Ugh, even for that one, it's like I can get $1 for it, but it's like I want $1.50 to $2 on a 10 wide. All right, let's try this one. So these aren't overlapping. I'll go 35 by 40 and a 66 by 65.95. Let's try to get this one filled for $1. That's a 5 wide. I get 5 wide. I risk 4 to make 1. I'm going to put this in as a pending order. Okay. So if you want a pending order where there's no hurry to get into this one can just sit and marinate. It'd be risking 4 to make 1. So pending order. Today is the 6th. This one's not filled yet, so you have plenty of time to get into this trade. I'm doing the 68.35 and the 68.40 and then the 6,600 and the 65.95. Dollar credit pending. This is a standard DPP for 5 wide. That way, if there's a little bit more volatility one way or the other, this one might have a chance of getting filled, but should be still pretty safe for the day. That the butterfly spread I put in was 60. It's way down here. And then a pending butterfly. I'll put this one. That butterfly, everyone can have that if you want it. It's probably not going to get filled, but a pending broken wing. I'll put this in Zoom. I did an SPX 3/6 expiration, buy the 65.50 put, sell the 65.25 put, and buy the 64.95 put. So I'm looking for $1 credit pending. So this is $4 max risk to make $1, but potential $25 profit trap. And again, it's not filled yet, but that's in Zoom for everybody. Oops, I'll put that for everybody. Okay, so everybody has that right there if you want it. It's just a pending order. So that one is going to get filled if price continues to fall. If price falls another, half 1%, that one might have a chance of offering some credit. But can everyone see on my broker platform still showing like a 9-cent debit? If this shows like 10 cents, 15 cents, 20 cents credit, I might take it because that's essentially a free $2,500 hedge. Not hedge, it's just a $2,500 profit trap. But I don't want to take the trade for a debit because I can risk $5 on the trade. Like I can risk 5, and that's not bad. It's like I risk $5 to make, profit trap, but the profit trap is such a rare trade. Probability of profit on this trade for any credit. This is what I like is if I can get it for credit, there's a 99.5% chance that it shows profit today. So that's why I don't want to take a debit because that just means I have like a 0.5% chance of any profit. Now that's a monster profit trap, which is great. Okay. But I don't want to take the trade for a debit. I want to take the trade for anything credit wise. 10 cents credit, 15 cents credit. I'll take the trade. That's enough to pay for some fees, but also have a $2,500 profit trap. And I'd let that kind of sit for the day. Okay. All right. So you got that one in Zoom. Edward, that was for you. Let's see, Bruce says POTUS is meeting with Raytheon, Lockheed, Northrop, ramping up munitions product. Yeah, I mean, this is just escalation. I mean, buckle up. Buckle up. All right, looking for some follow through here. I took a couple of debit spreads. We'll see if those offer some profit going into later today or early next week. We'll look to see if any defense trades fill, and that's fine. So, like I said, for me, we are testing this low. I'm going to move this over box wise. Again, my charts are getting a little bit noisy. I said earlier in the week, if you caught my video yesterday, I posted a video on Telegram. Hopefully, you all had a chance to see that. So, video here, market looks calm, but it's not. You know, dispersion trade is happening. Just talking about the big technicals here. I said if we have a daily or weekly candle close outside of this box, that is the first candle in 13, 14 weeks that we're actually getting some confirmation on the other side of this move. So the last time we had confirmation was this candle right here, and that was inside the box, and then literally 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. This is the 14th week. So on 14 weeks, if we finally have some push and pressure to the downside, if there's any follow through, then that's where we're likely going to go. Is this green box measurement, which is you take this measured move, you shift it for 100% breakout, and that's a pretty good target, right? Pretty good target. In the shorter picture, if this is just going to be like that, like I said, that box trade, then we box this in where we have this high to low. You have this high to low. You have this high to low. If it's just shifting these boxes a little bit, it's about there. But, you know, with this measure move down to about 6,550, 6,500, it wouldn't surprise me if the market maybe shoots a little bit lower. Okay. And again, I don't know. You know, it's like, look at this trend line. If this low is this low is this low, and we're using it today and the market bounces right back up into the range, it's the same noisy crap we've been dealing with for 14 weeks. So we just have to have a plan, right? All right. So hopefully 30 that's yesterday's close is around 30. I'm certainly hoping that we don't get there today. Let's see what the VIX does. We'll see. I mean, the VIX might smash lower from here. We'll find out. But I would think there's a lot of pressure. I mean, the non-farm numbers were pretty bad on top of everything going on in the Middle East, on top of oil prices. Like, this could just be like an ugly Friday where maybe there's not a ton more damage to the downside. I mean, that's the one thing I never assume that the market's just going to like move like crazy, right? What could happen today is there's such a high expected move, such high volatility that the market intraday price action wise does next to nothing. Next to nothing. But coming into the weekend, it's like, do futures flows as they close on Friday, open up on Sunday? What happens to Bitcoin over the weekend? We'll see like what risk appetite looks like. But when futures open on Sunday night, are futures opening with a push higher or futures opening with a push lower? I don't know. Are they gapping over the weekend? I don't know. But as of today, if it just is gap lower and it's just chop city, we're going to make some money today. And that's fine. So, you know, when a plan comes together, we can make a few bucks, mission accomplished. So we'll see. But if this is a daily close or a weekly close outside of this box, I would think that the follow through would be, if we have a daily close outside the box, we might spend 1 day retracing and then more pushing through. Or if we break below and we just immediately follow through, we find support and we see if this level offers a bounce. That is a 7% correction in the S&P. Okay. Could it happen? Sure. Could it get worse? Maybe. You know, I mean, if the market's down here, that's a 7.2% correction. Could it get worse? Sure. That could be the first big swing. So 7%, this is like this kind of rounded topping pattern. 7% pulls back here. And we have a lower high, lower low. There's your 10, 12, 15% correction. right? Do I think the market stays down there? Probably not. I mean, if Trump essentially wants to guarantee his loss in midterms, then we let the market go down 15, 20%, stay down there. But if there is de-escalate, the chance to do that is probably going to be right around this area. If we're going to de-escalate, in my opinion, where this is like intervention type de-escalation, it's probably in this area between like 6,150 to 6,000. That'd be my kind of Trump put, if you will. If it gets worse than that, then over here is where it's like maybe the combination of Fed and Trump are like, okay, let's get this thing to jawbone back up. Try to. So this would be like the most unpleasant correction. If we're down below like 6,000, that's an unpleasant correction. Could it happen? Maybe. I'd say that's maybe 10% right now. But the correction into this level seems probable. The correction into this level seems probable. I just think those are the buy zones for the technicals. Only energy is green. Yeah, I mean, and you know why. I mean, oil's up 57% from the lows, and it's not stopping. So what set the top and bottom? I mean, it's just price. I mean, the reason I did the top and bottom was right here. I just took there's lots of weekly support in here, and there's lots of weekly resistance in here. So that's my top and bottom. So that box, and again, I know that we've had wicks and wicks and wicks, but that's why you see these little trend lines here. So, I thought we had a rising wedge, and it's just taken forever for this rising wedge to play out. And, that's why I still think the market is maybe more favored to the downside. It's so difficult to get there. But if we break on the daily, break on the weekly, and it's below this yellow box for the first time in 14 weeks, path of least resistance to me spells more downside. But I've noticed that over the last several weeks that we're making slightly lower highs and slightly lower lows, and the market might still behave within this kind of, boxy context. Maybe. But a day like today, when we have a huge gap lower, it's like, it just seems like the pressure is on. So I'm not saying the levies are falling off and this market's going to dump, but just keep an eye on it. That's all. What was that put? Yeah. Okay. And the other reason I like that broke wing butterfly that I did is if we, remember how when we talked about who was with me last year when I kept talking about the extended move of the 50-day moving average? Who remembers talking to me about that? We had like one of the biggest extensions where this market hasn't pulled back to a 50-day moving average in like the longest stretches since like the 90s. And what annoyed me was that this happened in one day. One day. So the same type of measure, move, and breakout, could it happen in one day? Maybe. I mean, that's a terrible day, but it could happen. And this is just the market needing to get this cleanse over with. And it's like, does it happen today? Maybe. But if it breaks and retests and fails and it goes lower, like I could see that being like the correction needed for the bull speculation, the bull fever to leave the system a little bit. And then there's better opportunities to buy. I still don't think you can forcefully say this is a bear market. It's going to get worse. There's too much bear porn out there. And look, sentiment is already garbage. If you go to AAII this week, you already have more bears than bulls again. Right? So we have 35.5. I would imagine that next week on Wednesday, when this AAII prints, it's going to be probably 38 to 39 bearish. Again, like this is a pretty good contrarian signal. And I'm not saying I need to be bullish in this environment, but if the bears climb to, 40, 45%, I'm sorry, but they're probably not going to be rewarded for being overly bearish. Put premiums are expensive. People loading up on puts are going to they're just going to overpay for protection. Okay. Our VIX, by the way, I mean, I've got an April VIX, the VIX synthetic that we did for crash. It's like, we're up. I mean, I'm up $200. I'm like, ugh. I'm not saying I'm upset by this, but it's like, I did this synthetic VIX in case we have like a spike to 35 or 40. That should be offering me $500 to $1,000 protection. Okay. And again, that's not a ton of protection, but it's better than, it's a 200% gain, 250% gain on my position. But crash insurance is protecting us from like outlier type stuff. So anyway, we're just trying to figure it out. Okay. Bear call combo is up about $70 right now. I'm going to hang on to it a little bit longer. I put in a working order at 30 cents so I could walk away with $110. Okay. 674 by 3 got filled for engineered options. I just had a defense trade filled in engineered options. 674 and 3 getting filled. So I've got an EGO defense. Okay, so there's my weekly. There's my defense. And we'll keep an eye on this one. Again, I have other defense in. Working orders, the six. The next one for Monday is going to be the 670 or 668, 667. If that defense gets filled. Okay. All right. Butterflies for next week. Not really. I don't think I don't know. I don't want to force any trades. I mean, if we have like a weekend gap and we push down here, it's like I'm giving the market a lot of credit by saying this is support. Okay. I think this could be support in the short term and the market still rolls over because we just have a lot of stuff that is causing this market to stress. Right? You have dispersion trade, AI disruption. Now you have terrible jobs numbers. You have heightening inflation. You got oil spikes at 50+%. You got a war going on right now. I mean, how can the market rationalize that with something positive? I know there's a saying that, buy when missiles fly and sell when you hear the peace bell, but I think you take all that and stack it up with a terrible labor number today. We'll have to see what happens. I don't know. So long story short is, could you get premium for selling calls at 7,000? I mean, maybe, but probably not. I mean, that's to me like the safe spot. If I'm going to sell calls, like I'm not selling a 6,900 call, or like a 6,850 call. It's like 6,900 maybe. I mean, if we go to Monday, can we get something for, let's go SPX. If I go Monday, 6,900. I mean, it's not terrible, but am I excited about a bear call spread? Let's go 6,900. I mean, I get 40 cents. I'm risking 450 to make 50. It's like, is that a good trade? Well, it's an 88% chance of profit. It's an okay trade. If I built out a butterfly trade, then I set it up this way. Here's a broken wing butterfly. So if I get, it's a $500 bonus trap on top of my credit, but it's like I would only take this trade at maybe 50 cents to $1. I mean, 6,900 seems pretty difficult to reach right now. 6,900 is up here, but I don't know. I mean, if I'm going to sell calls, like I'm selling it at 7,000. So what I'm curious of is how far out would I go? Like the end of March, for example. And this is a stupid trade. But if I went end of March, could I sell 7,000 and get something for it? Okay, end of March. Could we get above 7,000? I mean, it shows that we could. So if I did, let's say 50 by 60 by 75, I mean, this wouldn't be a terrible trade, but it's like, how comfortable are you calling the top? I mean, I'm going at the expected move. There's a 12 delta. It's like we shouldn't go to 70, 60 by the end of the month. Like if there's going to be some downside in March, now's the time to do it. But I swear, all it takes is a quick de-escalation from Trump, and this market will rip in a 0-day and change the entire structure of the order flows. So I just think it's a tough trade. Tough trade. Garrett, yeah. So I mean, based on the alignments, I mean, and I've said that before. It's like if you follow the alignments with the moving averages with the 50 and the 144, it might just be a week that you don't want to stay. Now, what I'll do is I will probably still trade it. I'll trade it with defense. Because even without the indicators, my defense trade and my standard break even logic is we're still bullish as far as the market finishing break even or better, like 58% of the time. And that's with bull and bear markets. So no alignments, no stacked moving averages, just straight up bullish or bearish. It's a 58% house edge. I'll still take that trade. But the way I do it is I take that break even plus my defense, and that helps me kind of carve out the profit. So I still like, being bullish, almost every single week in engineered options, just because that is a much better trade than being bearish. Okay. There's going to be a time and a place when we should be bearish. It's not now. This is the time and place to have caution. This is the time and place to sell premium. This is the time and place to play some defense and just not take big risk. But there'll be a time and a place to be more bullish. I don't think that time is now. There'll be a time and a place to be more bearish or sitting on the sidelines. That time is not now. So I'm just going to be patient. Okay. We went too far to de-escalate. How do you work with Iran? I don't know. That's the thing is like, can you back this train up? I don't know. Okay. Cindy says Trump scares me. Canada's looking good to me now. Market jump still negative. Yeah, we'll see. We'll see. So let me take a look. So I'm going to switch gears here. So we've got some trades running, right? We're in for daily profit play. We got a filled trade on defense. That's fine. Daily profit play is hanging out, $35. It's fine. I just want to see if price will maybe revisit. Like I said, we poked the lows around 67.10. So if we look left on the chart, we're right at the same low again. But like I said, question to me is, do we test the low? Do we break the low? Do we hit the gamma level at 6,700 today? If we hit 6,700 today, and this happens in the next maybe 30 to 60 minutes, we should see a decent profit on our bear call spreads. So if that $1.40 is up close to $1 or close to $1.05 or $1.10, I'm just going to take the profit and move on for the day. Okay. Nice. I got $2 on the daily profit. Did you sell wider? I mean, price has gone down for most of the morning. So unless you had that little pop-up get you filled at $2. Or you went like 15 wide versus my 10 wide. I could see that giving you $2. So anyway, we'll keep an eye on that. But chart alarm set at the lows. Let me set the other chart alarm at 6,700 because that's our gamma level. And then I want to sell. I'm going to take a stab at some premium today. Let's go SPY. And probably just going to stack in it. I mean, VIX is at 20. I mean, VIX is retreating a little bit, but it's a higher. I mean, I've been selling premiums at like the 22 VIX and 21 VIXs and 23 VIXs. So maybe going a little bit further out on SPY. Let me see what this gets me for like a September expiration. If I go September 30th, maybe the strikes are okay. SPY. Could I go 500 by 470? Yep, I'm going to take this trade here. So this is going to be for Project Options Edge. I'm doing 500 by 470. That's a 30 wide profit trap. So that'd bring my cost basis way down. I'd still get over 370 to 380 bucks on the trade. There's a 99.5% chance of profit. I'm going to take this chance to use high VIX, higher premium, sell it. Could I go? I mean, I get over 300 bucks on the trade and I get a $40 wide profit trap. That lowers my delta quite a bit. See if I get this trade for like 310. I'll try 315. This is a pretty good trade. This is Project Options Edge, pending order. So I'm trying 315. Mid is 314. Let's try a 3. I'll go 310. It probably gets filled. 313 got filled. Okay. All right. So that trade for Project Options Edge, I'm buying the 510, selling the 470. I'm selling 2 at the 470. That gives me a 40 wide profit trap. I'll build it out and I'll throw it in a Telegram. I'm going to get this filled for all my margin accounts. Let me get it filled and then I'll build this out. Oops, wrong. Let's go option strat. There we go. So I'm going, where the hell's the ratio spread? Put ratio spread on SPY. I went to September 30th and I'm going all the way down here. I'm buying the 510 and I'm selling the 470. That's my trade. So current price is right here. Price would have to fall. I mean, we have a lot of room. We could fall all the way back down to April lows and lower. Our low on SPY was 480. We could fall lower than that. And then I still have a profit trap that gets me to a break even around 427, 426. I'll do the math on the trade. So let me get this filled. I like that trade quite a bit. Getting this in my margin accounts. 313 is getting filled, no problem. Okay. It's getting filled for 320 now. Even better. 319. Try to get 320 on this. 320 getting filled. Good. Okay. All right. 320 fill on Project Options Edge. I'm pretty happy with that trade. Telegram coming at you. So Project Options Edge, trade 120. SPY, September 30th expiration. Buy the 510. Sell the 470. 320 credit is a ratio spread on SPY. I'm willing to own SPY, but assignment is unlikely. There's a 99.5% chance of profit on the trade as it sits right now with a 27 VIX, which I love. Break-even price if assigned. So I take the 470. So I take the 470 minus the $40 profit trap. So 470 minus 40 minus 320, 426.80. Okay. So pretty good position there. If you don't want the assignment, which again, it's unlikely going to get assigned, but if you want to keep an eye on the on just the put side, you know, that naked put is filled for like 550. So that trades for, I mean, $20. I can just take the loss and let the hedge be free. You can offset that. That's what's kind of nice about this is if I don't want the assignment, if this thing trades for like $20 credit, or I'm sorry, $20 debit, I would take like a $1,500 loss on the overall position. But this 510 hedge should be worth enough to maybe offset the entire trade. So it's very possible that with a ratio spread this wide, that even if I took a loss on the premium side, I can still close out for a break even or better with the hedge at 510. So, you know, if it happens to be looking at that type of trade management, then I'll throw it in Project Options Edge. Other than that, it just sets up for a pretty good income trade by September. Okay, required capital. So if you have a margin account, it's not awful. Let me throw it in. I'll go similar, and I'll put it in. I've got margin required about $4,900 for the trade. That's margin. So it's not awful from Tasty's side, like just under $5,000. Return on that capital would be, you know, 320 out of $4,900. I'm making about 6.5% return on that buying power. But I'm also building out like a $4,000 profit trap as well. So the reality is, you know, could it pay a lot? Sure, maybe. What's the ownership price? 420. I mean 426. If I own the SPY at 426, number one, can you imagine that? Like from right here at 700 to 426, we own the SPY 38.5% lower. Actually, it'd be about 39% lower. I mean that's a terrible year. But if I own the SPY there, that'd be a healthy discount because I mean, even if the market was going to have like, oh my gosh, we're going to hit a great financial crisis, it goes down 50%. If I started here and owned some shares, I would just keep it. I would keep the shares if I have the cash for it, keep the shares, sell some covered calls out of the money if this market bounces hard at like 50, 60%. I mean, again, this is like worst case scenario stuff, but if we bounce at like 50, 60% drawdowns and then we work our way back up in the next 3 years, 5 years to all-time highs, I don't know what that looks like, but I would take my chances on a 70 to 80% gain on those on that ownership, in addition to selling options around it. Yep. So it's about a 6.5%. It's about 6.5% on your buying power, which I'm not saying that's game changer, but you have a 99.5% chance of profit on the trade. So is it an income stack? For me, it is. I've been doing a lot of premium selling in this area where from September, July, September, once we have October expirations, I'll start doing those in October. And I also have December and January's. So as long as price just doesn't drop below April lows or stay below April lows, I've got, I don't know, 10 grand of income across 17 accounts. Like I'll do okay. I'll do okay. I mean, it's not super exciting, but 10 grand on 17 accounts, like that's a 35 to 40% buffer on price for a pretty safe six-figure income. It's okay. And like there's going to be a time and a place where I want to deploy more capital and be more bullish, but now is not that time. So I'm just going to hang out. But I think it's a good trade. So it's in for Project Options Edge. Let me throw it into the tracker for Project Options Edge as well. So that's trade 117, SPY, 36, 930 expiration, buy the 510, sell the 470, and a 320 credit. And we can manage it like a wheel strategy. Okay. Good stuff. Yep. And so for today's daily profit play, we really just have a bit of a chop fest, which, is this a surprising, actual result for the day? Of course it's not. Market comes in with all sorts of wild and crazy expectations. We're red in everything, right? S&P down 1.5%, futures down 1.56, NASDAQ down 1.36. Surprisingly, NASDAQ is down less than the S&P. The Dow is down almost 1.9%. Yikes. Dow is really underperforming. Russell down 2.3%. I mean, it's okay. Like I still like the indexes. It's just we got to figure out how these things are going to behave. For the day, is it going to be like another kind of island gap? Yeah, we'll find out what next week brings us. If the market is going to be choppy for the day and just leave this big gap here, it's like, well, next week's either pushing lower or filling the gap. And Monday is a brand new day. But if we make money today, I don't want to worry about over the weekend, and I don't want to have the big weekend overnight exposure on a 0 one-day expiration or trading on Monday hoping that the market doesn't gap, because it's probably going to gap. I've had this question a lot. People asking me, Chris, daily profit play, what about pattern day trading? Number one, in the next probably 30 days, pattern day trading isn't a thing for smaller accounts, which is great. That's a big win for retail traders. Number two, if you want to go to a 1 DTE, if you look at any of these gaps, your positions are toast. If you take a 1 DTE, your positions are toast. If anyone remembers the story of Captain Condor last year, that's why he lost $50 million going into December. Because we had gaps, we had inefficient market movements, and he was, basically doubling and quadrupling down on his trade size until he blew up his accounts or his followers. I think that you take a 0 DTE and you manage it. If you take a zero DT, remember, if you hold it for the day, it doesn't count as pattern day trading if you let it expire. This is also why in Daily Profit Play, I teach you we can go to a lower delta and take a defined risk trade that it's like I'm risking $4 to make one, set it up at a delta. We're probably going to win most of the time, and you never have to worry about expiration. Just take the trade. But there will be days that you don't get filled for $1, and there will be days that you could potentially lose on occasion, like 10% of the time. But for the most part, this trade every single day, even if you needed to let the trade go to expiration, if you started with a 10 delta, you're going to win most of the time. On paper, that is a 90% chance of profit. The only thing that would not give you a win for the day is if it doesn't offer enough credit to give you $1. And maybe that happens, 20% of the time. But this mechanically, if you need to hold the trade all day, this is a great trade. 10 delta, iron condor, 90% chance of profit, collect the dollar minimum, risking 4, great trade for the day. And then once pattern day trading goes away, hopefully by the end of this month, that would be the SEC approval. I think that'd be a big win for the retail community. And then people can trade as much as they do in Forex or as much as they do in futures. They can trade all the freaking time. Because I thought it was a stupid rule anyway. I mean, pattern day trading is a terrible rule. It's really, really restricting. And so hopefully, the Tasty team is correct where they've been working on this with the CBOE for a long time, and all they need is the SEC approval. I think it would have happened sooner if it wasn't for the shutdown last fall. But now it looks like it's slotted for like end of April or end of Q1 where it goes into effect. So we'll see. Okay. All right. Any questions for right now? Any questions for right now? How are we doing? How's everyone's pulse? Ronald, what's the question? Is that an engineered options? I'll look at them. I've got a bunch of work. I'm only in 2 of them for the week. My engineered options hasn't filled for the monthlies yet. We still need some more time to push in those trades and maybe price to push a little bit lower. So all I have is my weekly and weekly. So you can see here, these are all my working orders. So for the end of the month, still pending, still pending, still pending for the end of the month. Yeah, I mean, it's all good. So if you're 250, you're looking at the broken wings, you're going SPX broken wings. SPX we did in the engineering options masterclass this week, working orders. Let me look at my expirations for March. I'm looking for the 3. So that is this one. So this is engineered options, engineered options, engineered options. Still pending. Okay, still pending. That's fine. They're out there where we need them to be, right? They're out there based on our levels. I think we're doing a 10 wide profit trap. Let me see how I structured that again. It's 10 by 15. So you've got a $1,000 profit trap. You're risking 4 to make 1 with a $1,000 profit trap. Or actually, no, I'm sorry. You're risking 250 to make 250. And then you also have a $1,000 profit trap. So that one's going to be like, we need price to basically go down below these strikes by probably 100 points in order for that credit to get filled. But that's why I'm doing it for the month. For the month, it's like, I will trust the process. Okay. Gex levels. Yep. Here's where we're at. So that's real-time gamma. So we tested, we didn't hit 6,700. That was the biggest gamma level I saw this morning. It's gone now. Doesn't mean that it can't come back. I mean, if the price turns south and we hit fresh lows, we hit 6,700 today. Pre-market, 6,750 was my biggest gamma level. We're kind of hanging out there for the day. The 6,700 had disappeared, but the market is going to have to do something pretty spectacular to make its way all the way back up to this gap fill today. So even if it does hit the gap fill today, that's a big swing in percent. That's 100 points intraday. I'm not saying that it can't happen, but our trade is up to 45, right? We're at 45. That's my line in the sand. So 45 and 55, 50 and 60. Those are my call strikes on this morning's daily profit play. Pattern day trading regulations go away completely if you start the day. I mean, if you have 25K, it doesn't apply, right? If you have 25K, the market, the brokers will treat you like you don't have pattern day trade restrictions. But once it goes away entirely, then it just doesn't matter. It doesn't matter at all. So hopefully that's the bigger win for the retail crowd, is just letting it go away entirely. Okay, one thing on the day as well is, I mean, if everyone's thinking like, oh, it's going green, what does that mean? Well, look at the call and put sentiment. It's 37 to 39. Even if this market is going to respond to this, we're going nowhere today so far. Like the bulls or bears have not gotten an edge. So all it is just a chop fest. Markets down on terrible sentiment, markets down on futures, markets down on oil, markets down with a terrible non-farm print this morning. And it might just be just a nasty gap lower. And like I said, an island gap, which is when we come into next week's trading, is this the quick, like, market makers keep the stability in the markets for today and things just stay very, very calm. And then we have next week where it's either this pushes more pressure to the downside or we go up and fill a gap. I don't know, but we'll find out on Monday, right? So I think seems like we have a pretty good profit opportunity for daily profit play. I might just have to hang out and wait a little bit longer. That's okay. Where's it at right now? Daily profit play for today is now up 50, about 55 to 60 bucks. Okay. I'll just hang on to it for right now. If I can close this thing down for, 30 cents, I'm happy with that. That's where I've got the pending order. I don't know, 20 cents is fine too if it gets later in the day. Just trying to take a safe win and not worry about it. Right? How does pinch look for the indexes? A good point. Let's take a look. Let me try to find my scanner here. Let me just open it up. Hinge point. It's probably still pinched, to be honest, but let's find out. I mean, this is still like not a ton of follow through. But let's go pinch point scanner. So we went from 40 stocks down to 24. I still have the QQQ. So now I'm just doing a search for all. Let's go SPY. Okay, SPY is a get set. So we're starting to get the momentum breakout going on SPY. We do have a trade running on pinch on the SPY. So that's encouraging that the market is starting that breakout point to the downside. Let's go DIA. DIA is now in a no pinch, and we've had a decent breakout to the downside a little bit. I'm not trading the Dow. I'm trading SPY only right now. And then IWM. Oops. IWM is in get set. So we're starting that initial breakdown. It was in the go zone, and now it's in get set. So that breakdown has started in IWM. So Qs are still in the go zone. If I go all stock, get rid of the ticker. This is my list right here. I don't mind looking at some fresh trades. So let me see if I can find some goodies today in pinch. We have like 11 pending orders from the last session we did a couple weeks ago. I'm happy just kind of keeping those trades around. I think we have HPQ expiring March 20th. We have a couple trades on March 20th. We have a lot of our trades out in April. And I mean, if we're going to get some direction, like going into next week, hopefully is where we get the push one way or the other. So I'll price these out. Let me zoom out here. So CR at the bottom, Q's at the top. Take a screenshot of this, and then I'll price these out. Cool. Okay. And then on I did a SPY trade for pinch. We got the SPX for the double ups to the upside versus double ups to the downside. Okay. So we need to see some follow through to that like 65 50 zone. If we get that follow through by next Friday, I wish I would have timed it out to the 20th, but we'll see if there's follow through next week. If there's follow through next week, great. And then pinch, excuse me, with trade. Ugh. On pinch point, we have the trade right here. So looking for price to make its way into that expected move. It'd be 665 by 660. So we only paid 229 for a $5 spread. So we can make up to 270 on the trade. I'm just looking to see if we can carve out a net profit. That would be, let price do what it needs to do. Yeah, must be. Okay, good. All right. So pinch, good. I'm gonna take a look at some of these today. So Qs, I might look at a. It depends on how it looks. I mean, Qs are a bit more volatile. There's typically a higher premium. If it prices out the right way to the expected move, I'll take a stab at it. Some of these we have repeats on. I've already taken some notes for their last masterclass on which of these are still pinched and haven't moved yet. We might have some pending orders on these. But if I can find another 3, 4, 5 trades that I like and price them out, then I'll toss the trades in if we get filled. So for pinch point, if I can find something out of this list of 20 something, then I'll take some more trades. Okay. Let's see what else. Is it possible that a broken wing? I'm just curious on the day. I mean, if this was decent premium, is it possible that the 6700 handle holds today? 6700. If I went 10, 67, and 85, how much do I like that trade? That put my break even at 6690. Like that's essentially a free. It's like a free $1,500 or a $10 profit trap. I don't know if this is the safest trade, but I mean that's offering 20 cents. I'd be risking 480 to make. I mean, it's not really about the credit up front. It's about the profit trap at the end of the day. So price falls to fresh lows today. We could fall down as low as 66.85 before I take on any risk on this trade. I kind of like it. I mean, I feel better if this is trading for 50 cents. I might take a stab at it. 20 to 30 isn't bad. It's just I got to be comfortable with that risk at the bottom. Like we'd have to make fresh lows today. Let me check on something here for my futures market. I don't know. It's probably an unnecessary trade. If we come up to where we open today, this is one thing I look at for price action. If we come up to where we open today and we fall back down, I mean, that might offer more credit. Let's try something here. So we had the lows at 67.11. We poked those lows. 6,700 is a big gamma level. If I go 85, that'd be a $1,500 profit trap. 85 by, so that's 15 wide, 20 wide. Damn it. It pops in as a debit. So I need to do like 10 wide. That's credit right there. Let me see if this one will fill for 50 cents credit. All right. Can we get any credit on this trade? 15 cents credit. So it's not filling for 10 cents. That sucks. Let me try. I'll let it sit at 50 cents credit. So a 66.95 by 85 by 70. It's just a broken wing butterfly. It'd be a trap right down here. So if price were to come back down towards the lows, the profit trap kicks in around 66.95, which would be right here. And from 95 to 85 to 75, that would be up to a $1,000 profit trap. It'd be anywhere between $1 to $10 bonus profit. And then the risk would be just below this level. So price have to fall all the way back down to 66.75 to take in any risk. Probably not the smartest trade. But I like the idea of the profit trap. In case the market's just going to do this for the day. You know, we're still looking at the Bulls versus Bears. If this is going to be just like Chop City for the day, we'll see. 6,700, 15 fly for 14 credit. Oh, you did an iron fly. I gotcha. So you're trying to trap that around. That's pretty good, Larry. You're trying to get price to trap around that. So 67.15, 6,700, 66.85. That's pretty good, man. Yeah, I like that. All right, let me see. 67, 66.90, and 75. See if I can get this for like 20 cents. I'm just going to take a stab at it, see if it fills for like, oh, F me. That's not what I wanted. I tried to do credit, damn it. All right, hang on. I got to close that trade. I fucking hate it when that happens. See, I even do it too. Fat finger trade. Try to put in a credit. So close. Give me 20 cents credit, you turds. That's so annoying. That's my bad. Well, it looks like it just ate a quick 20 bucks. 10, 5. Shoot. Dang it. That's going to cost me like 20 bucks. That is annoying. All right. They closed me out at 10 debit. Shoot. Well, now I got to be picky. So let's try that again, shall we? 67 by 90 by 75. Now I'm going to set it up for 50 cents. 50 cents credit. So credit. 50 cents credit. Pending. All right. So I'm going to stack in a couple of broken wings around those lows for 50 cents credit. I'd like $1. It's going to be tough to get filled for $1. We'd have to go to some from fresh lows for the day. Nice. Iron fly backwards. Yeah. Let's see. I mean, the VIX is high enough. One thing, I've done this a couple of times when the VIX is up, so I've got those broken wings there. Those are pending, so I can play around with the prices here. If I did let's let's see here, like 60. So if I think price can stay above like 6,700, let's go 90 to 40 and 30. That'd be 10 wide to there. And this trade should be doable. I need price to stay below 68.30. If we stay below 68.30, I can make another 180 bucks today. That's not a bad trade. What's this one? Make 90 to risk 410. I like this one a little bit more. I mean, this is kind of creative. I'm going to take a stab at this. So here's the deal. If I put this trade on, I need price to stay above 66.90 and below 68.30. If that is a trade, I can make I mean, it depends on what the fill is here. I could make like 180, 190 to risk 800 bucks. I mean, that's a pretty standard daily profit play if I'm going like 10 wide. I mean, pulling in a buck 80, buck 90 is actually great. Fairly high probability to profit with expected moves. Issue is I'd have to cancel my broken wings here or sprinkle them in around this to make sure it doesn't overlap. Let me see if this will fill. Let's see if I can get like a 142 fill. That'd be risking 800 to make 200. Let's try 141.90. Okay, let's try 80. $75. So 175 to make 825 to make one. Nope, not filling. 170 profit. One. Come on. All right, I got filled at a 141.60. So I can make 160 bucks to risk 840. Now what I'm going to do is clean up some of my pending orders. So that 5 wide that I did and the broken wings, I'm going to get rid of some of these broken wings. So this one, anything that overlaps at the 80. I'm going to cancel both these for a second, start from scratch. Okay, and then the 5 wide, cancel this one. So now I don't have any overlapping strikes. Okay, so daily profit play, you're getting another trade. Optional if you want it. Just to walk through what it is. So this is basically like a kind of an in the money iron condor. I usually don't do this for our trades. I don't want to throw anybody off here, but I'm doing a 3-6 expiration, selling the 66.90 call, buying the 60. It's like the 68.40, I think. 66.90 call by 68.40. Selling the 68.30 and buying the 66.80. So I pulled in $141.60 credit out of a $150 wide spread. So I'm risking 840 to make 160. This trade needs price to stay less than 6930 and greater than 6690. So if we stay inside the expected move, this is going to be another winner to add to the day. Okay, so I'll show you the trade that I just built out here. Now, I still want to sprinkle in a defense trade on the put side. So I'm still going to go. So this one has some risk in between like 90 and 80. So if I go 95, 85 by 70, this will cover that entire risk. If this one offers 50 cents credit, then I can get a trade that offers me $1,000 profit trap. So I'm going to sprinkle in a couple of these for 50 cents credit. 50 cents credit. That way there's no overlap. And then another defense trade to the downside, 75, 60. That's 20. So 15 by 20. See if we can get 50 cents on that one as well. Okay. So I'll build out that trade that I just took. Where's option strat? I did this in SPX. So for today, the 6th, let's build out Iron Condor. So I went up on the call side. I sold the 66.90 and bought the 68.40 and then sold the 68.30 by 66.80 there. So that's the trade that I just took. It's like doing an Iron Condor, but when you go in the money, you get slightly higher premiums. I just need price to stay inside this range, and that's worth. I got filled at 141.60. So because I'm 150 wide spread, okay, I would keep of the $10 wide because it's a 10 wide difference between my puts and calls. Of the 10 wide, I have $1.60 max profit, which means of the 10 wide, I'm risking $8.40. So if price can stay less than 60, is it 68? Yeah, 68.30 and stay greater than. So I need less than 68.30 and I need greater than 66.90 for that trade to win. Okay. So that one, I'll keep an eye on it. Again, I'm taking a trade. You don't have to join me for this one. But if I can stack up another winner for my bear call spreads plus this one, if I can, add the three of them up for, I mean, I guess for the day, if I was up $200, $250, I'll take the profit. So I'll keep an eye on this for all, overall like profit management. So 1, 2, 3, 4. So DPP in the money, Iron Condor. Pulled in 141.60. I'll keep an eye on this one. So I should just be able to close this one down. Basically, the full debit on this is going to be, I'm in for 141.60 credit. The full debit's going to be 140.00. That's going to be the end of the day. So if I can close this at like 140.60, 140.30, I'm pulling in most of that profit. Okay. So between this trade for profit, this trade for potential profit, if they add up to, I mean, if it's up to $150 to $200 profit for the day, then I'm going to take the profit. So that's my management for the day. All right. Well, that's going to be my day for management. Not necessarily looking to hang on to these trades all day, but by the time we get to around noon or 1 o'clock, is the market still, choppy and sideways? We'll find out, right? I mean, if we came right back up to here and the market's going to come right back down to be a range trade, let's see what happens. I've got some defense in around this level here. Let me kind of sprinkle in. Let me see where that defense starts. Yeah, I'll take my chances for that defense. What did we measure out for the day with our gamma? So 66.77 expected move. I probably need to have things there, to be honest. To be on the safer side, I probably need this to be kind of like my profit trap. Recenter my indicator around 68.29. Let's give me a couple other things before I go. 68.29. Okay, so that's my centering VIX box. VIX box lows around 67.20. This is our measure move this morning from the Thinkorswim 72.22. So maybe a trap trade. Get rid of this broken wing. This broken wing might be a little bit too tight. 95.85 puts me a break even at 75. It's not bad. This one's okay. I'm going to go 67 by 85. So that's 15 wide here. Give me any credit. That way my defense is about the expected move. Let's try 50 cents on this one. 50 cents credit. Okay. All right. So a couple broken wing defense trades if price is going to threaten my put side. Otherwise, we'll just hang out. Is it still a good buy at 240? Well, I'm not sure. I'm not sure you're going to get it at 2. So that trade is not. You're talking the trade I just took on daily profit play. That trade took $160 credit or $141.60 credit. Like right now, it's offering 141, 142. If you get 142, if you get filled for 142, you're risking 8 to make 2. It's like you have the same strikes. I mean, 142 is not a bad fill. I don't know if you're going to fill that. I mean, I filled for 141.60. If you get 141.75, 141.80, like you're getting a better fill than I did. So again, not a bad trade, but again, just understand what it is and know where price has to stay. Price has to stay greater than 66.90. Okay. Or price has to stay less than 68.30. If it stays inside that range, there's a profit. So if you can get that thing filled for 142, 141.90, 141.80, that's a better fill than me, and it's still a good trade. But I'm still going to play defense. Okay, and now the gamma level is back around 6,700. That gamma level started to light back up. So 66.90, we'll see. Larry, your fly might be looking pretty good around that 6,700 handle today. And my bear call spreads, I'm going to let these bear calls probably just go for the day. If I'm right, I'm going to keep them running for the day. So this will be cancel the pending order and just take the full profit. So if we're not going to get to 68.45 today, I'm going to take the full $1.40, and I'll try to manage this one, play some defense if I need to, and try to see where the dust settles and adds up for the day. All right, we good? Cool. Look, I know that was pretty intense. But look, it's a zero DT. Sometimes you have to have a couple of backup plans. I just didn't love the standard daily profit play today, although it probably was fine. Looking at this price action, if you went in for standard daily profit play, did your 15 deltas or 10 deltas, price from the open is still very much contained within our expected move, right? This was the open. If you go 72 points lower, 72 points higher, it's still contained. I've got to open around 70. We dropped to, we went 60 points down. So 72 is right around this 6,700 handle. So as long as we could bounce off of that, it's fine. So let's see if price stays within the expected move today. Keith, show on trading screen again. Looked like the trades were on both call and put sides. Yeah, it was. It was the trade that I took was an in the money iron condor. So I'm doing a call at 66.90. That's a sell call. And then I'm going 150 wide. That's my buy call. So I sell the 66.90, buy the 68.40, and then I sell the put at 68.30, and I buy the 150 wide 66.80. So that's what creates this profit trap as long as price stays range bound. And I kind of set that profit trap based on where prices, kind of already behaved for the last couple of hours, hour and a half, I guess. But there's still risk. If price goes too low or too high, there's still risk on the trade like we typically have in a daily profit play. But this is, a bit wider. So we'll see what happens. Okay. All right. I'll let you go. Let me see if I have anything on the calendar for right now. I think we're good. If you didn't have a chance to check out my YouTube video, I posted this yesterday in Telegram. It was like maybe 15 minutes. Check it out. There's a YouTube video. I go through, indexes, dollar index, oil, gold, silver, what I'm doing for this year, what we've been doing so far. We're just trading the chop and daily profit play. We're winning on stacking those positions on waterfall income. We're playing defense and winning on engineered options. We're selling lots of premium project options edge. I mean, I toy with the idea of like, man, there's part of me that wants to be way more aggressive right now, but part of me appreciates that I still have 50% of my accounts in cash, that I'm just going to kind of wait for a better opportunity. To me, the better opportunity is if we pull back in this level. To me, that's a much better opportunity to get long. Even if all we do is get long here to go back to the same all-time highs, that's still a great trade. I could probably generate a decent amount of profit there, even if my accounts could gain an extra 3 to 5%. As a whole, it's like I could take that trade. But I do exercise a little bit of caution because I mean we are stacking up so many concerns that the one thing I'm truly the most concerned with in our markets is that we have a Trump put and we have a Fed put that doesn't help. That's what I'm concerned with. Is that we go to like, we're going to send checks to everyone. We're promising, $2,000 rebates. We're doing this for affordability. We're going to, rate control the housing market. All these things in essence would help, but it is going to be like you're going to blow out our U.S. deficits so bad. I don't think you can stop that. And that's where I think you just look at this and you got to say, I've got to be in gold. I've got to be in gold. Bitcoin was a maybe. Bitcoin might still get a benefit from that just because of what it is, but I just think because it's tied to such risk appetite, it's a tough order for Bitcoin to think like it's going to go up. But gold, oh my gosh, gold is probably going to be one of the safest bid trades of the next few years. Is just I don't think you can go wrong having gold in the portfolio. So anyway, all right, folks, I'll let you go for today. Inflation, maybe. Yeah, I mean, if we did something like that, populist wise, we definitely have some inflation. I mean, the markets lost their mind when we were handing out, rebate checks for people in 2020, 2021 as like a help. And I mean, we got to 8, 9% inflation. So I don't think, I don't think the government would, I don't know. I feel like they're smarter at this point to avoid something like that. But I don't know. It's like I really think that anything can happen, and people might think that the bottom. Like here's the reality: the bottom of the K-shaped economy, the bottom of the K. If you're giving those rebate checks and you're giving that helping hand, that could help the bottom of the K while cratering the earnings in the markets. And that's how we kind of neutralize the playing field. Is here's the K-shaped economy. If you're trying to do something to help the bottom, it might come to the detriment of the top of the K, feeling the pinch of the wealth effect of this market dropping 10, 15, 20%. So even if this goes sideways or gets a helping hand and this falls, well, there's the lower end of the K getting some assistance while the bottom end is taking it on the chin. But there's also a fast way to lose a lot of support. And I just think midterms are going to be a very troubling slash challenging time for the current administration with is like you're dealing with so much emotion right now in the markets of how people feel and how the market is are two very different things. Like Wall Street can be excited and have good earnings and be at all-time highs, and Main Street can be just hating everything. And I said that last year. I feel like we could go into a situation, especially with AI, that disruption is so good for corporate profits that it's like Wall Street has the boom and Main Street has the bust. And how about that for a really interesting time? Is we're at all-time highs and nobody should be complaining, but yet people that aren't invested are just like missing out. So anyway, we'll see. But yeah, war times, I mean, anything goes during war times. My hope is that this can de-escalate somewhat quickly. I certainly don't think the U.S. is going to want to see $100 a barrel. But OPEC nations and energy dependent nations, they don't want to see $55 oil either. So even if this is the quick spike up to get them, putting on production and pumping things higher. I just wonder where the halting point is where we can't have oil prices going too much higher. So we'll see. Any weekend sessions? Not for me. Not for me. We're trying to sneak in a little bit of a baby moon in the next couple weekends. I think we were going to try to sneak out to Hawaii today. I get very lucky. My fiance is in the airline industry, so we fly for cheap. But the flights look really bad. Plus, logistically, it's like we have a baby. So it wasn't exactly the easiest flight just to pick up and say, we're going to go to Maui and lose. I mean, time difference. I'm not even sure. What time is it right now? Eastern time to Maui time. So East, okay, so ahead by 5 hours. So I have like a Sunday webinar. I have a Sunday webinar with Lance. I think it's 5 p.m. Eastern time. So it'd be like noon in Hawaii. I think we're on a plane at that time, but I don't think we're going this weekend. So anyway, we're trying to figure something out. We've got baby number 2 coming April 12th. So we're trying to sneak in a little bit of travel before it's not allowed at like 36, 37 weeks. So we're getting there. Yeah. So you have 5 out. Well, is that Rommel saying 2 a.m.? What's 9:30? So 9:30. What time is it in Maui when it's 9:30 a.m. Eastern time? It should be 4:30 a.m., right? Is that right? So 4:30 a.m. versus 9:30 Eastern time. Yeah, okay. So anyway, we'll see if that works out in the next. I think we're going to try for next weekend. But to be determined. Before we go, price action for the day, we'll see if the markets are going to be this gap lower. Maybe it hangs out for the day, right? Maybe range bound. Maybe the market tries to work its way back up. Maybe we hit round number 6,800. But hopefully our 68.45 or 68.30 is safe. That would be the plan. So if I'm in any trouble today, I could put a put spread in here. 45, 25, 65. Maybe 50, 35. Really? Okay. Okay. I mean, 50 cents, I'd sacrifice that for a profit trap. See, 75 cents. All right. I'm going to run a live session today for the closing bell just because the way I've got things stacked up is so price, if we stay inside of my range, then I'll have the $1.40 on bear call spreads, the $1.60 on my the trade I just took, which is that like, in the money iron condor. So I've got $300 there. I have broke wing butterflies on the put side. I just put in a 90. I got filled for 95 cents. So I got filled for a 95-cent debit on a butterfly that is 25 wide. So that would at least give me some defense. If we're going to threaten my strikes today on the call side, I've got a $2,500 profit trap there. Realistically, I'm probably just going to make the $300 today, and I'll lose the 95, and that gives me 205 for the day, and I'm done. Okay, so I will run a final hour session today and see how things kind of shake out. So around 3 p.m., maybe 3 p.m., 3:15, I should be good to run a little final hour session. So hang out. I might be upstairs on the laptop for that, but you're all welcome to join me. So I'll throw that in Telegram, and then you can jump in on YouTube and check it out with me. Okay. All right. So that trade that I just took is the defense trade. It is a 68.60 put. It's a butterfly. So I sold 2 at the 68.60 and I went 25 wide here. So if price comes back in to try to test the gap fill or get into The positive negative gamma pivot around 68.45. That profit trap should offer me some profit. Again, it's a low probability trade, but it's potentially $2,500 for what cost me 95 cents. So I could still make a few $100 on the day. Keep an eye on price action. Here's real time gamma. I mean, the market realistically it shouldn't close higher than like 68.30 today. It shouldn't close lower than 66.90 today. Those are my levels. But could the market dance around and just be a little bit higher and then close the day a little bit lower? Sure, maybe. Right? I mean, if I knew it, I'd bet the farm on it. I don't. I'm just taking some calculated risks. So if it stays in here, good winning day on the range stuff. I have some defense up here. I have some defense down here. So I expect to win in this area, and I'll sacrifice these defense trades. These ones are broken wings, so that they would be filling as credits, but it's the top one because I have more threats to the upside. I've got the debit butterfly up there. So we'll see how it happens. Anyway, I'll keep you posted. I'll be back around 3 o'clock, and we can take this into the close if you're interested.